Hi, today we'll be discussing our outlook on the infrastructure sector going forward for 2016 and 17. Though we have remained overweight over the last 2 years on the infrastructure sector, backed by the increasing capital expenditure by the government of India. Now, we have seen the capital expenditure got increased more towards the road sector, the building segment. When I talk about building, it's more of the AIMS building or the awarding done by the NBCC and HSCC. And we have also seen the capex being done by a lot of power distribution side led by Power Grid in some states like Bihar and Chhattisgarh. Now, given that your visibility still remains intact with respect to the capital expenditure from the central government side, but we believe that the central government is doing more capex on the EPC front and will start feeling a heat after 1.5 years. And that's where we done an analysis that given that the devolution of funds have been increasing from the central government to the state government side, and if these states are getting good amount of funds, we believe that about 9 states, which is Maharashtra, Telangana, Andhra, Bihar, Punjab, will start doing more capex if they start using these funds, which is getting from the central government side, and which will again will start increase the capex on the road side, building side, and more on the metro projects as well, which is largely getting funded in India by JICA, and majority of the around 30% of the equity is getting funded by the state government. Now, as far as apart from this urban infra capex, we believe railway is something which has been a laggard in the last 2 years due to the higher operating ratio which the railway is currently going on. We believe that though LIC has agreed to provide funds to the railway ministry, though we haven't seen major tenders coming out in 2015 and rather in 2016 starting as well. So we continue to remain underweight on the railway capex theme going forward. As far as defense is concerned, we believe that large chunky projects will still take time to stabilize or start coming into the system. We believe that you will see more of the tenders from the guns or the artillery part and as well as landing platform dock. Because 80% of the funding which is given by the central government to the defense ministry, 80% of that is roughly occupied for the existing capital commitments. So going forward, we believe that more of the state capex has to come in the country after 1 year to get more visibility on the roads and buildings side. As far as railways, we are still awaiting for good amount of tenders to come in, though because it's a more of a funding game that is currently being backed up by the central government of India. So to sum up, we continue to remain overweight more on the urban infra capex side rather than industrials. We continue to like stocks like KNR, Ahluwalia contracts. We also maintained our view that you will not see in the country for the developers like Sadbhav, IRB, Ashoka, LFS Transportation any balance sheet correction to happen, and more of a margins will also not expand because these margins have been bid for an EPC segment. So we believe that even they will be a beneficiary for the capex which will be done in the road side, but we prefer more to play with contractors, and we also are overweight on Adani Port based on their capacities. There will be a transient pain because your country's bulk trade is coming down at this point, but we continue to remain overweight given that their focus is more on the containers and on the liquid side. So to sum up, once again, we continue to remain overweight on the infrastructure sector as well as for 2016 and 2017.